Hey guys, this one's going to be subscribers only, right? So, look, I understand in terms of where the price is at, maybe some of the dilemmas that some of you guys are facing. As I keep saying, right? Every aspect of, trading in general is pretty much personal, right? If you've got in at a low price, you've got in at a high price. So there's not a kind of one size fits all type of solution, right? Now, if you look back at, where we've been, kind of where we're going, you're trying to break it down to a logical kind of situation that makes as much sense to you as possible, right? So there's no wrong or right. You might be in a trade for a short period. You might be in a trade for a long period. You might be happy with a, 20K DCA. You might be, pissed off with a 60K entry first time round. What you're trying to do is to work out kind of, where we're at, right? And then how you use that to your advantage. Now, one of the reasons for me, Bitcoin's not interesting is, I've been lucky to buy it on the bottom, right? This move up here, fine. Sold some off along the way, etc., etc. This type of trade is, it's a less than 1-to-1 type risk reward ratio for me, right? And therefore, it's boring, right? It's beyond boring. I'm obviously still running the commentary because I know a lot of people are interested in Bitcoin. They want to use or trade Bitcoin. They see this as some, magical tool. It's going to go to trillions of dollars. When you break it down kind of step by step, right? The first thing I look for, forget all the fundamentals, forget all the sentiment, forget, what it can do, the halving, the miners, the multiplier, right? That's part of shit as far as I'm concerned, right? The real kind of nugget is, a quick glance. We had this, right? And this was practically nothing, right? This was kind of, a play thing. We run up and have a first real rally. We come back down and have a two, right? If you look at things like a Weiss wave, you can actually see the volume for a three. Four was obviously back to the rocket call and a potential five, right? We almost can't deny, given the current situation, right? These are pretty much obvious. They kind of set out, they're there, right? Now, if you think of what this means, bigger picture, we've actually gone and created, right, a large scale one. Now, the next issue is, right, if we're talking about the kind of scale from, 2009 when Bitcoin kind of first started, right away through to, where we to 2022, right? That's 12, 13 years. If we look at a 12, 13 year, move, let's just say we come back, this is 2001. So let's just say it's, it's a 12-year move, right? We're looking from the top rather than the bottom, sorry. If we look at the kind of numbers and the kind of time frame that we're talking about, we're not going to have a move that's taken, 12 years to get to one, for it to take, 6 months to get to two, for us to get to number three up high in another 6 months. And that's just, simple logic, right? If you think of what happens in these moves, this is why for me, this is, what I wanted to put this video together for, right? Obviously, some people are going to say, oh, this was an A, this was a B, this was a C. We're done. Two's in. Now, let's assume, right, that this is the case. You're going to have to do a 1, 2, because you're going to have to count every move. We're going to see a 3 inside, a 4, and a 5, which means 1 is in. Then you come back technically for a 2 within the 2, right? Then you come up for a 3, probably around that triple top. Then you come in for a 4, then you come in for a 5, right? Now, the issue is you can measure the kind of level that we're talking about. We're probably still at this point under 100K, right? So even with the best will in the world, what's not happening at the moment, right? These are the kinds of things you want to be able to look for, kind of step by step by step, right? So this is the obvious thing for me in terms of where we currently at or where we currently not. If we now go back to everything I've just covered, right? I've just talked about, why I think we are where we are. Now, a couple of the options that we've got left on the table is that we have this kind of slow grind up. We get up to this point, right? Now, from a liquidity perspective, there's obviously going to be liquidity sitting there. That'll fuel a bigger move down. So there's the one scenario. The second scenario is we've got liquidity sitting above this. We've got a gap obviously in there as well. So there's an awful lot of liquidity sitting in the kind of zone that we're tapping into right now. Just as I said back in 2022, right? A, B, C. Again, another misconception, right, is C needs to come down, 9K, 12K. No. We could come back down, make another double bottom. We could come back down just at this level. Again, there's going to be liquidity sitting there. So just taking the logic kind of step by step, seeing and understanding, where the logic is sitting. If we now zoom in a little bit closer, right? We look at things like footprints, we look at gaps, look at liquidity, look at what we do from a fib, you look at everything from Elliott wave, Wyckoff perspective. You're trying to find, an edge, right? If we take these moves up, we got to look first of all at the moves back, right? So, just do things, you play around with this, right? This isn't a wrong or a right. This is just giving some kind of idea in terms of what's happened, what's happening. We've clearly had quite a large amount of movement in there. Pretty obvious, yeah? We've clearly got nothing in here, which is a nice gap. Now, let's just assume that we take this as one point of interest. Let's look at where that finishes. Boom. Right? So there's the first kind of area where there's almost a lack of interest. So this is the first thing. Now, regardless of what we do then from there, right, we can put a volume profile in here, come up to this and say, now what's next? All the points of control are down relatively low. Look at the volume difference. Now, when you're looking for what about this or what about that or what about this scenario, what's this level if it's invalidated, none of that matters. Because when you break this down, step by step by step, right, you're kind of taking this into how you pick it apart. If we've just seen that all the volume's down low, the next thing we're going to look at is let's just stick the volume profile on. Now the issue that we have is all the volume was down low, which would suggest that all is buying happening. So let's stick over here, let's stick the kind of general volume, right, that we had in terms of the ramp. Forget the ramp up. Now, the only place that we've peaked to this kind of level, right, is there. Well, we can argue that, the price is different this time and so on and so on. Well, no, we can't, because if we look at where we are at this kind of price here, right, we were actually up at 40K. If we look at where we were at this particular point, we were up as high as 21.3. Right? So what we're saying is 21.3 there, and the volume's peaked. This was 40K. This was the reaccumulation. Right? You see the logic in this? What we've now done is we've basically come down, right, compared to rallied up. Big difference. So forget any other indicator, forget any other tool. This is kind of where we're at, right? Now, when I'm looking at this, there's a couple of key points. I've talked about, I think it was even this morning, about the kinds of situations you'd need. Right? I'm not going to go and look at taking a long position there because I don't believe Bitcoin gets a new all-time high yet. Right? So I'm going to have to come down probably in, roughly in alignment, probably just a bit lower than the previous all-time high up here at 65. My stop loss realistically needs to be down there. Right? Look at this for a risk-reward trade. Right? That's not what you want. Realistically, what you want is a trade that looks like this. And that's only a 24. That trade I took the other week, a non-farm payroll, was a 48. And to give you kind of an idea in terms of scale, I can't even put it on this type of chart. It's still not enough. Right, there we go, roughly there. Right? That's the kind of trade it took 4 or 5 seconds to execute, right? The reality is, it's not about the numbers. It's about knowing what you're looking for. So when you put all this together, right, the point is right now, what have we got to the upside? Well, we've got triple top. Right? That's kind of where liquidity sits. What have we got to the downside? We got gaps. We got liquidity. We got liquidity. We got liquidity. There's an awful lot there to suggest that we're more likely to want to be down than up, right? We've got the volume, obviously, the opposite way. We've got divergence sitting in there. We've got, the OBV in terms of the oscillator. There's loads of things, right? We've got a monthly stochastic kind of already overbought. So we're in this kind of situation right now where we've kind of gone up, right? And we still, 20k underneath the current all-time high. That's not what you'd expect if this is the start of a 3 type move. Right? So for me right now, the logic that we've got a 0, potential 1, which means we come back down 2. We've got an A, potential B, which means we come back down 2. The third option is that we grind up and create the triple top, and we come back down probably over the next 3 years or more because of the scale. And I'm talking about the reason for the length on this is, as I've talked about it being, fuel in a car. Right? It's how far do you think we can go if this was the buy-in to take us all the way up to the top? The top is more or less in, right? You might have obviously a little bit of an extra run. You might have an extra sweep. This is obviously Bitcoin. There is a lot of hype. Stick something like this on. What do we have? We've got liquidity. We've swept liquidity the first time, which has technically created a double sweep. Do you really think at this particular stage we're likely ready to come up to this level before the drop? Because price has to come back down to this kind of zone. It's already mapped out. So likelihood is this to this, or this to this. Given the ETFs and everything else, the logic is probably more the second scenario than anything else. All right. So if you're breaking it down, bit by bit by bit, we got things like master pattern. I'm on a weekly time frame. Master pattern, your center being 27.9, 28 grand. Obviously got liquidity, so we could easily break through, come back and retest back down. Right? Lots of different options. But the general idea is there's no wrong or right. I might be completely wrong in all of this. What you've got to do is work out where this suits you best in terms of what you're looking for out of the trade. Right? So when I look at then this particular level, right, and from the low, I'm not going to say, is this a 1, is this a 2, is that a 3? That might have to be a 4. If that's a 4, well, this is probably the 5. Does this mean this is a 1? We've come back in, this is our 2. We're now moving up, we've got a 1, we've got a 2, we've got a 3, we've got a 4, we've got a 5, we've got a 3. We come back down for a 4. You look at these levels, 3 can't be the shortest, right? Well, 3 probably the comparable there to this. It might be a little bit longer, but we're going to have a similar run. Let's just assume that this is the current move. Right? We're going to have to assume, and that's actually this one, sorry. We have to assume, we're just going to copy that over, that still puts us 72k. All of the logic is there, and that's not going into any detail, any depth, in the grand scheme of things. You just need to be realistic in terms of, 1, expectations, 2, what actually needs to happen time frame wise. BlackRock's not going to come in and say, I'm going to buy at this price, all the retail have bought at this price, and we're going to keep pushing this up. This is where the COT data comes in, and this is how you start to build the basis of your own bias. All right, so I'm going to finish like this for now. I'll probably do another video soon because there's a few things I want to talk about in terms of liquidity. But I just wanted to get this out there to start with because I think there's still a little bit of confusion. I know some of you guys are newer, But I think, you know, take the time to go through the educational content. Just kind of watch this a couple of times over if you need to, and just get comfortable with knowing where your own logic sits for your own type of trading, style of trading, or trading length. All right. I'm going to leave it like that. Thanks for watching, guys. I'll see you on the next one. Cheers all.